Hello, gentlemen. Greg McCloskey with a Forex quick look on. Take a look at the dollar versus yen. Today's date is April 5th, 2024. Let's get started. In trading on Thursday, the price of the dollar versus yen tried to stay above these two moving averages, the 100 and 200 hour moving averages. They came in at 151.58, 151.48 respectively. But in the afternoon sell-off today, where the yield started to come down and we saw the U.S. stocks get hit. We saw the dollar versus yen actually move to the downside. We saw the euro versus US dollar move lower, but all of the action was, I guess, on the yen and the yen crosses as they moved lower on the lower stock market on risk-off sentiment. That took the price all the way down to a low price of 151.18. If we were to take a look at the lows here, let's say that this low right here, this low came in a little bit around 150.114. Actually, the low price for the day came in at 151.11. So 11 was a low price. We moved a little bit below this old low right here, held support above these lows right here near the 151 level. So what it did technically, folks, was just get back below the 100 and 200 hour moving averages, and that was the support for the week so far, with the price moving above that level and then staying above that level for most of Thursday, all of Wednesday, all of Tuesday, and on Monday was when the price moved above those moving averages and tilted bias more to the upside. For the trading week, the high price that we saw here on Wednesday's trade reached just short of the high price from last week, which was the highest price going back 30 plus years at 151.967. Of course, even though the price made a 30-year high, if we go back to the daily chart and take a look at the 2023 high, that's right here, that came in at 151.91. If we take a look at the 2022 high, came in at 151.94. So the high price that we saw last week was just 2 pips above the 2022 high price. It's a price high right here, and just about 4 or 5 pips above this high right here. So we basically have 1, 2, 3. Triple top up here with a number of different highs coming between 88 and 96 here in the over the last few weeks of trading in the dollar versus yen. So that ceiling would need to be broken ultimately if the price is going to go higher. But as we saw in trading yesterday, the bias shifted more to the downside, breaking below the 100 200 hour moving average and pushing in the downward direction. Now, having said that, there is a number of different swing levels over here, for instance, where a ceiling was put in place through this period right through here, and actually going back in time, you can't see it through here, but this was a high ceiling that eventually caused the price to move to the downside. Then we moved above it here, and then tried to hold it here, falling for one part of one day before reestablishing support. And we haven't been below this level since then, but it would take a move below 151.71 to 88 on the downside to increase the bearish bias. More than half traders looking toward the 50% of just this last move to the upside here in the dollar versus yen. So sellers are more in play below the 100 200 hour moving average. We'll see if they can keep that momentum going into the new trading day. If we move back above those 2 moving averages, all bets are off, and we'll look for the new 30-year high on a break of 151.967. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.